Hello everyone, welcome back to the channel. This is Fair Value Finder, and today, just as we do every month, we are taking a look at some stocks that I would consider buying and avoiding in the month of June 2024. We are constantly analyzing stocks on the channel, trying to come up with a fair value and a potential rate of growth, and using that, determining whether a stock is a reasonable buy or not. And over the past few months, have been keeping track of it. As you can see, SPY in this time frame is up almost 5.4% with 0.34% paid in dividends. The stocks that I've rated as buys are up about 1.7%, and we've actually closed out two positions there, locked in 3.24%. So underperforming SPY a little bit, not a massive surprise, especially so early on. We'd like to see it pretty close to SPY, but really looking for outperformance over the long run. And then stocks that I would avoid, there have been some hot stocks on this list. Those are up almost 8.3%, and we have one that dropped significantly since going on the list and locked in a almost 5% loss on that. So those are outperforming SPY a little bit. This portfolio is almost split. There's a little bit more to the downside than there are to the upside. Almost everything is coming from FICO. We've taken a look at this one before. I've analyzed it twice. I do not see the value in it as these prices. Although it seems to be a great company with some good fundamentals, I do see a almost 30% pullback coming once this run is over. So currently, it's really impacting how things look here, but over the long run, I think that we'll see it come down to a more reasonable level, and it'll end up on this half. Microsoft and Moody's are the other two. Moody's in the same sector as FICO, so it seems to just be a really hot sector right now. They're up almost 7%. Microsoft is part of the AI bubble, which, as there's a lot of people saying right now, this AI bubble is definitely certain to pop. There's nothing too special about it. I mean, I was doing back in college projects with artificial intelligence in my computer science classes. It's not anything special. And if anything, we'll probably end up seeing smaller, more specialized companies rather than the large companies taking advantage of the whole situation. So Apple and Microsoft are definitely not reasonable at this time. I wouldn't sell, but I definitely wouldn't buy. And then on the other end, stocks that I've put on my buy list, or I have bought, I just bought quite a bit of Alibaba. I keep picking up some PayPal. Vici is another. They're just interest rate sensitive, and with the Fed's recent decisions, they're just holding down a little bit. Once we see some dividends come in, I think that this one will look a whole lot better. Barrick Gold, again, is just kind of economically tied as a gold stock. Not down too much. But later in the year, I think that they're going to have some really good earnings reports off of these high gold prices that we've had. So it's definitely one to keep an eye on, and we'll most likely be doubling down on all of these this month. Closed out Chewy and Birkenstock for about 49 and 36% gains respectively. And both of those are now on the overvalued end of the spectrum. I wouldn't necessarily bet against them. I'd have to reanalyze them, but they had some huge swings just like Ulta did on the sell side. And then Intuit is up a little bit with a decent dividend, and Generac leading this portfolio up 10%, and I think it still does have a bit of a way to go. So that's the performance so far. Not a massive surprise. Everything is up. Locked in some decent gains on the stocks I'm buying list, and a pretty big loss on the stocks to avoid list. Now, these aren't... This stocks to avoid list isn't if you own it, sell it, necessarily. These are all quality companies but they are just at valuated prices that they're on the watch list because I'd love to own them, but not at the current price. We would probably have a very red portfolio if I went back and I took every single stock that was not a quality stock that I recommended as not only a do not buy, but as a sell. Back when I was tracking that, they were significantly underperforming the market. But as of today, here are all of the quality stocks that we have identified, analyzed, came up with a fair value and a annual return on. And on the buy side, it's not a massive list. We have 6 stocks, and familiar with all the names: Alibaba, PayPal, Vici, Caesars, Ulta, and Generac. Intuit is just under the cusp, so not necessarily considering buying that one anymore. You wouldn't get market outperformance at these current prices. But on the overvalued side, we have a pretty big list, identifying 14 stocks that, although they're quality companies, their valuations are very elevated. And these are Birkenstock. As I said, they were on the buy side. Now they're overvalued. I do want to reanalyze them. It looks like we haven't looked at them since October, and they ran up significantly after their most recent earnings, so it could impact the numbers here. MasterCard, I wish that it were at a better valuation and I could buy it, but I do own a little bit, and I am buying some of these overvalued stocks, doing some call credit spreads and putting the profit into shares, just so that way I'm invested into these quality companies, just using other people's money. MasterCard being one of them. I do know that I am negative on my position, so it has pulled back from where I started buying it. Qualcomm is another one where I'm doing this, and it's not up too much from where I started buying at. Then we also have Waste Management, Chewy, Oracle, Moody's, Ferrari, ASML, Microsoft, FICO, Snowflake, Palantir, and Shopify. So a lot of tech. It definitely looks like a bit of a tech bubble there, where you're paying a premium of, looks like 25-30% on a lot of tech stocks right now, especially those affiliated with AI. And so this does help to notice some sectors in the market that are currently undervalued or overvalued. Like, I do feel like real estate is a undervalued sector at the moment, and that tech, specifically AI related, is significantly overvalued. And a lot of those tech AI stocks are in the S&P, which is helping to propel that forward as well. When that bubble does inevitably pop, we'll probably see a lot of money flowing back to some of these undervalued sectors. And that's why I think it's a decent time to be putting capital towards those. Real estate specifically, something very interest rate dependent. And that is all for this month. So I will update the portfolios to keep track of these stocks and see how they perform over the coming months. Let me know in the comments if you have any questions or concerns about any of these ratings. I mean, it's hard to find a quality company for a good price. I'm not saying that you're making a poor decision if you're buying any of these stocks at the current levels, but as a value investor, I don't think you're getting a good deal, and you could get better returns investing your capital elsewhere, such as these stocks here. So I want to thank you guys for watching. Please like and enjoy the video. Comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.